Okay. All right. So we're recording now. All right. Just for the sake of recording, we are following the pound dollar and the gold trades.
Correct.
There's 4 minutes to the news, and I'm switching over to the 1 minute charts for the news. The anticipation is a good yo-yo effect, to say the least. And just for this purpose, I'm going to be trading just one lot. And you can see the gold the pound dollar has been rotating around an axis. And the axis is actually right there. And the solid support and resistance goes in, comes out, goes in, comes out, goes in, comes out. And gold has been rotating around the weekly pivot, which is, if I can get the value from each one. Oh, actually the previous month high. I think daily high is where it's been rotating. It's 2,742. So $742. And it has tested that several times, done a false break, going back in, and that's where we sit. So let's see what the news brings. Somebody keeping an eye on the news, I assume.
You'll know on the charts long before the news goes pop on the thing.
All right. Well, I'll put the news on the side. And then your governor is also speaking at 9 o'clock, so pound dollar may be a little subdued because of his speech. And hopefully, Bank of Canada will affect the pound somewhat. Those, Canadian prices reflect on oil prices. So.
Okay, I have a fresh entry on the pound US here now.
Yeah.
I'm in. Very aggressive, I know, but I'm in. It's got
20 seconds before the news.
12 pip stop loss.
It'll be interesting to see if it hits the stop loss, if it drives through it, or when you're in the slippage.
Yeah, this is demo. Obviously, this is demo.
Yeah. There we go. So it hit your stop loss and spiked.
Yeah, yeah.
But as you can see, all the indicators changed from a solid, even the 1 hour has gone above 50 on both of them. All right, so the news came out as anticipated for the consumer price index, and obviously that was bad for the dollar, and that's shown in the spike. Did you get slippage on that, John?
Yeah.
On your trade?
Yeah.
Okay. 50 pips. I mean, drove it 50 pips. God, Lord. Good Lord.
Yeah. Gold went up 137 pips.
Yeah.
And now it'll start coming back down.
And Fitmo has locked the platform, so can't do anything. And just driving it up.
They lock it because they don't let you trade the news, or it
2
just
minutes before, 2 minutes after. Yeah.
Oh, okay.
So I'm trying to take a trade on this platform and it won't let me enter. Ah, there it is. A little late. It came in. Of course, I'm already in the negative. And the entry was because I wanted to take an entry here. I was a little late, took the entry on this one. Now you anticipate the backwash. And so this is a safety trade. And if it comes down here, I'll take another trade.
So you took a trade pound US long, or was it?
Yeah. And I should take one from the gold also.
I was wondering why my pound dollar didn't look like yours. I was on a pound Aussie. I'm like, why everybody got to spike up and I got to spike down?
Even this platform is kind of freezing.
Yeah, everything's kind of slow. That's a big spike.
Yeah.
It's a big 15-minute bar. Yeah, it's best just to let everything settle down and then see if there's gonna be any follow throughs.
Correct. Yeah, all platforms are freezing. Come on. Won't let me enter. There you go. Okay. Give me a trade. Very slow. All right, gold is moving in the right direction. All right, let's take another entry. No, I'll wait for it.
My platform is frozen.
Yeah, Fitmo is behind on pricing also. Okay. Another entry on pound dollar. The stochastic turning up. Gold is already up here. I don't know. I don't know how far this is going to go. I'm already on the 1 minute. I don't know.
Well, the average daily range is about 38 pips away.
Yeah.
But it's with the news, this thing could go 400 pips for the day.
All right. So I took another entry on gold. So I have 2 entries now on each of these. And that'll be it. I won't be taking any more entries. And I should be able to switch. Follow it on the 5-minute. So I don't get jittered out. And then this also 5-minute. Okay. Do we know what the targets are? For any, for both of them?
On the pound US, I would be going for 124.95.
Yeah. So I'll put that in. $1.495. Come on. And it really slowed the platform down. And on gold,
I put in 203.102. But I'm not liking what I've seen on gold at the moment.
yeah.
Oh, I have it now. I see what's happening. Bastards. Yeah.
Come on, come on. Both of them going back and forth.
Yeah, well, it's a massive stop hunt.
Well, gold will probably pull back to the London's high.
Over here?
Yeah, that's a possibility. Before it resumes.
Okay. Gold looks like a better trade than the pound dollar because the H1 is not set properly on pound. But gold is pointing up in all time frames. All right, patience. So both of these broke the upper trend line of the flag.
Yeah.
And I mean, technically speaking, it should retest this and then go, but we'll see. I mean, it's going to be 20 minutes before BOE Bailey speaks. And that's going to cause another fluctuation here. See, my son should have listened to me. told him to go ahead and buy. He didn't like the formation, so he didn't buy. We've been up 100 pips by now.
On which one? On the pound US?
Yeah.
Well, that's
One of the rare times I was right.
That's a hell of a spike on the pound US.
I mean, ideally, we should have waited for the rebound, retrace, and then taken an entry, right, Santiago? Because this is a spike, and on a spike, you don't know what it's going to do.
Right, you don't know if it's going to come back hard and retest all the way in the bottom, or what. It's best just to wait for the pullback,
right?
Either on the 5 minute or maybe on the 15, depending on which one gives in,
right?
And then continues.
Since I was itchy finger happy, I'm going to have to pay with the drawdowns. But this is a good way to see what it's going to do.
Yeah, see what it's doing.
And this thing, when it was up here, the moving average had come into alignment, but now when it drew back, it's back out of alignment. Whereas this thing is already in alignment. So even if it comes back, it should go gold, but gold is finicky.
Oh, gold can wipe you out in a heartbeat.
Yeah.
Yeah.
But that's what Santiago likes to trade. I don't know how you stomach it, buddy.
Sweet God almighty. I just took a quick look at the pound yen. My God.
What happened to the pound yen?
Well, since the high of today, it's dropped 130 odd pips. 120 pips.
Yeah.
And it's just dropped 55 pips since the news went off.
Oh, yeah.
And that turned everything around as well.
All right. They're really making the platform slow. Look at that. In fact, all the yen pairs dropped.
Yeah.
Except the USD yen, obviously. But even
the
the USD yen dropped.
Yeah, that dropped. Yeah, that dropped. That a huge drop. 100 and odd pips.
Holy cow. Threw everything out of whack.
Gold has turned around and is shooting down.
Yeah. It's kind of expected, right? Everything has to retrace. Only reason I'm able to sit through this is because I'm only doing one lot.
Oh, yes, of course. Yeah. I was wondering what you were doing. I forgot you said you're only doing one lot. Yeah, okay. Right. Yeah.
It was my standard 30 lots, then I would have waited for the retrace. So now I take that chance of jumping in early. These two trades are basically the fear of missing out trades.
Yeah,
don't wait for
I was just testing to see how the signals work prior to the news.
Yeah.
And it just goes to prove what you said all along. It doesn't matter about the signals once the news goes off.
Right.
There's no indicators going to pick up what's going when it moves that fast, that hard. You're basically trading the market itself rather than the indicators.
Now you're trading by the seat of your pants, which is a sure loser.
Correct, and totally correct, and even more than totally correct.
This will kick off here. Let's see what the US 30 did. Come on. Oh boy. Now, why did the US 30 shoot up when the dollar is weak?
God knows.
Does that make any sense?
Because the dollar is weak, then the stocks go up.
The dollar is actually inverse.
Inverse, yeah.
Oh,
so,
okay. Okay. So it tested the EU high. And let's see what it does from here. Two minutes to go. So the first exit is always when it closes below the 5. If this closes below the 5, I'm going to exit the trade. I got a minute and 45 seconds. And it looks like based on what this is doing, that it's going to close below. The consumer price index month on month was lower than actual. So that's the reason it went. The year on year and food and energy month on month was as expected. But the month on month of the CPI itself was below the actual, which is bearish for the dollar. Okay, so it looks like you may have to wait another bar to see what it does on both of these. And 9 seconds, unless it shoots down, it's going to close above the 5. Okay. 5 minutes reprieve. So the question is, should we be following this on the 5 minute or the 15 minute? What do you guys think?
Well, on which one? Gold?
Both of them.
I will follow both the stochastic depending on which one does what. If the 15 stays strong with a 5 pull back, then you stay in until the 5 minute gets back in sync with it.
Okay.
If
yeah,
the
I mean 15 is above the 80, right?
Right.
On both of them.
If the 5 pulls back and the 15 is pulling back too, then I will get out and wait.
Okay.
But it all depends on the strength of the which stochastic is doing what.
Right. Yeah, they're both pulling back strong now. The H1 moving average also coming in line with the this, and it's interesting. Yeah, H1 kicked in over here too. So looks like we're in good shape as far as the moving averages are concerned. The gold is still playing hide and seek. The 6 are strong. Somebody's taking trades.
I had a trade on the pound US.
Long?
Yeah, but it keeps moving around on me. So like I'm moving stuff around to try and stay in it.
Okay.
Which is a stupid thing to do. But I'm just trying to test how this is going to work out. My target on the pound US is 124.95.
Yeah, that's what I put in.
But I don't like the way it's stalling out.
Yeah, it hit the, what it did was it hit the midpoint of the R1 and the pivot.
Yeah.
And then bounced. So if it breaks that, it should go all the way to the R1 of the previous week high, one or the other. And that's like 40 more pips than what your target is.
Yeah.
I would say the target should be 1.2525.
Yeah.
But I'll leave it where it is. Okay, this becomes the battleground. If it breaks this high, it'll go for both of them. This is what they call the apex or the master bar.
That's the apex of the master what?
Master candle.
All right.
If it stays within this candle, then there's going to be a constant battle between the buyers and sellers. So this will be a range basically. This candle.
Right.
A lot of people trade looking at a any given long bar like here on the gold. This is a master candle right here because everything else stays within that candle.
Yeah.
Right?
Yeah.
And when it breaks is when they take their trade. And the thinking is that, this is your breakout trades basically.
Oh, okay.
But if it wasn't the news, then it should have gone lower like that.
Yeah.
So that's one way to look at finding out your price action as to where it's going to go. Look at that. I should have been out of this trade.
Yeah.
All right. I'm out of that.
See, I was going to say gold to me looks like it's topped out and it's doing its level best to get back down. Now I know gold can swap and turn you around in a heartbeat, right?
Yeah, Santiago, you're going to stay in till you see the change in the 15, right?
No.
You're already out.
Yeah, I would be out already because of the 5 minute cycle down.
Yeah.
And then getting back in if everything gets back in sync.
Okay.
The reason why it's if it was a regular day, yeah, I can probably manage to stay in, but because it's such a big spike,
right,
you don't know what they're gonna do. So
you don't know where it's going to come 50%, 75%.
Yeah, or just come back and take the low down of the day again.
Yeah.
And just swing all the way down. So when news, all the rules are out of the most of the rules are out.
Yeah.
So any change in direction or any change in cycles, I'm out waiting for it to cycle back in that direction.
Okay. Yeah, I got out a little late. I should have been out on this, but I got out. Not too bad. The pound is still fighting the sellers, trying to go up.
Plus, it's probably waiting for the next hour to
Yep.
make its next move.
Well, Governor Bailey is about to speak in 3 minutes.
Oh, okay.
So it's waiting on his speech. Well, the banks already know what he's going to say.
Right.
It's just us poor retail traders who have to wait. But you guys want to do this again on Friday when there's the US news coming out again?
I won't be around.
Yeah, you won't be around. Okay.
And I won't be around next week.
Okay.
So
it's just you and me, Santiago. Let's butt heads. Let's go.
you guys can always call me from your new yacht in the Med. No.
Yeah. That's a ways away right now.
Or in the Caribbean, probably closer for you.
If you have the money, it doesn't matter. He could be on the Nile on a yacht.
I'd love to be there. I'd love to go to Egypt and have a trip down the Nile, I'll tell you that now.
My wife will never go to Egypt. Too many
Pardon?
snakes. My wife will never go there. Too many snakes.
Too many snakes. Well, there's many kinds of snakes.
Wow. The real snakes, not the mankind snakes.
Yeah, well. Okay, we're a minute away from the top of the hour.
Yeah, you're about to get a new 4-hour bar also. All right, so I'm out of the pound dollars trades also.
Yeah.
Because the 5 minute is cycling down.
Yeah, likewise.
Now we just wait for Mr. Bailey to do his magic. And there's the 9 a.m. Okay, let's see. What is the news? Mr. Bailey says there is no systemic financial crisis right now.
There's no what?
No systemic financial crisis right now.
All right. Just because he says so.
Yeah, well, pound is going to react to that, right? And banking sector issues have become more pronounced. Post-crisis reforms have worked. Banks have adequate capital and liquidity assets. Okay. So gold is getting back into sync.
Yep.
Interesting that the 1 hour stochastic has moved into the overbought area. Even with all this crap.
That's what I was just looking at. I entered pound US short.
You're taking a pound US short?
Yeah.
Why?
Because of that long apex candle you talked about.
Yeah, but the
15 is
indicators
turning down on the stochastics.
okay.
Admittedly, the 5 is already at the bottom there, so, but it broke the London high.
Okay. Well, on this one, the white line did not follow the green line. So this is going to turn back up. Unless it slowly grinds down, right? The 1 hour and 15-minute moving averages are both long.
I know.
So this is an anticipation.
But everything was going down pretty steadily before the news went off.
Okay.
Now, you could be right and I could be totally wrong, but I'll give it another couple of minutes.
Ah, dang, the bounce we see dropped further.
You still in? I thought you closed that trade.
I did.
All right.
Spiked and then dropped again. Ah, well. And cry over 22 pips. Interesting that the yen bounced around like that.
I looked at the yen, 10, 15 minutes ago, and then I haven't gone back to it since because I just didn't like what was happening over there.
Okay. So what is the lesson learned in this?
Wait at least 15 minutes after the news goes off.
Or wait for the indicators to settle down and give you a good signal? Right?
Yeah.
Rather than taking
I'm saying at least 15 minutes because normally it takes about 15 minutes to half an hour, but at least 15 minutes.
So we shouldn't be anxious about getting in at the news side.
No, we shouldn't at all. We shouldn't even be thinking about trading at the moment yet.
Yeah, and a lot of times it depends what kind of spike you have. Like this was a big spike, you couldn't get in it,
right?
Unless you was already in it.
Well, yeah. Fitmo won't let you get in anyway.
Right,
so.
right. So
they won't let you take a new trade 2 minutes before or after the news. But if you're already in a trade,
yeah,
you're okay.
Yeah, but if you want to get out, it won't let you do that either.
That's right.
Yeah,
that's
right.
Unless you have a take profit.
But isn't that a violation?
Violation of what?
If you in the trade, while the news comes, no.
No.
Okay.
So Bitmore doesn't care whether you trade before. It just cares about your $10,000 a day risk management.
Oh, Fitmo has a rule that you cannot trade. You cannot enter a new trade 2 minutes before or after. Not all news items. They identify the ones that you can't trade.
It doesn't matter if they lock you out anyway. So the platform freezes for 4 minutes. And didn't understand that. Then I went and looked it up as to why it was doing that. And there it was in the rules. So there's no violation as you're saying there, Santiago, because they lock you out. So there's no way to violate that rule.
Oh, okay. Because I think before they wouldn't lock you out. People were violating the rules, not knowing that there was news coming out and stuff like that.
Well, now they've become very holistic about it.
Right. Which is better because I mean a lot of times people are not paying attention to the news.
Yeah.
You don't have to worry about it.
Well, if you're not paying attention to the news, you're saying Fitmo is crap. It's platforms locked up, blah blah blah, like we were doing. All right, gold.
I just entered it.
It's coming down.
Yeah, I just entered gold short.
You're anticipating there.
Yeah, well, it's up 14 pips at the moment.
Yeah.
Well, I mean, if you're scalping, as long as your 1 minute is in good pattern, then you can scalp it until it gets out of pattern.
Yeah.
Scalp it until the cows come home.
But even on the 1 minute, your magenta line is above the 50.
Right, but you have a change in direction and two continuation trades, or whatever it is.
Yeah, 1, 2, 3, 4 continuation trades.
So you can actually scalp that while the 15 and the 5 are cycling down.
Yeah, but the 15 is not cycling down.
Yeah, well, the 5 was cycling down, but the 15
5 is cycling.
15 is trying to turn. But after that, then you want the 5 minute to start getting into pattern in order to continue trading in that direction.
Correct. One. All right.
Yeah, well, you have to be like in and out because for your scalping, and the 5 minutes not in the pattern, and
Yeah.
it's just a 1 minute. You're not going for much.
Yeah. The 5 minute was cycling down. So you could have taken any of these trades short.
Right.
But then this is what it does.
Right. So you know you got to be ready to get out of it as soon as you get a few pips in profit.
So John, I hope you're out of your pound trade short.
Yeah.
Okay. Because the 5 minute just got back into pattern. So
Yeah, I know. I see that. Yeah.
I'm going long here. With the same take profit.
Oh, come on, computer, will you? Platform freezes up all the time.
And this is also an anticipation because I didn't wait for the bar to close.
Right.
For the pattern to confirm.
Well, what's the 1 minute doing?
1 minute was already in a pattern.
Yeah, it's in a good trend, so
yeah.
it'd be all right. It's only when the 1 minute is not in a good trend,
yeah,
that you anticipate a 5 and it doesn't follow through.
Right. Yeah, it set up a good pattern because the H1 and 15 were both bullish.
All right.
Then the 5 minute became bullish, and then the 1 minute gave you the pattern. It went straight into the overbought conditions. Okay.
All right, so you got a new 5.
Let's see if it takes this high out, which is 2470, 12 pips away. On gold, the H4 stochastic is splitting in and out. So let's look at the H4 on this one. Yeah. The green line is going back and forth. That's why this is switching back and forth. And it's a new 4-hour bar anyway. So just have to wait and see what it does. Came back and tested the trend line, it broke. Let's see if that holds. Even here, it was a test of that trend line. I went right back. So to tell you the truth, I mean, these technical, I don't draw the technical lines anymore because the stochastic basically accounts for that. When it gets out of pattern and back in pattern, where it is helpful if you want to see where the price is going to anticipate where the price is going to go.
Mm-hmm.
I mean, I used to do all that, but my charts got really dirty, and I had to call the lines off of my charts. But if I go to the 1 hour time frame here, let's see if we have a fib. So this bar itself is a fib. If I do the fib on that bar, and see where it's supposed to go. So that John's target is right outside the 127. This is where I would normally target my first target at, somewhere in here.
Right.
Then expect a bounce back to test the high.
Yeah.
And then, or even the 23.6, and then go back to the 161.8. So this price is 1.2490. It's only 5 pips, right, below the target. But that's the way I would normally play it if I played a flip. And that would, if it takes this out, then that's where I'm anticipating the yellow ball to be. And then it comes back here, gives me a 1 ball or 2 ball, goes back up, takes the yellow ball out again, and then goes. So it would be something like this. Back to here. And then like that. Or even the 38.2, right? So that's the pattern I'm expecting it to play out.
Okay.
Makes sense?
Yeah.
So this already tested this pivot. It's going to test it again, bounce, test it again, and then if it's really going to break it, it's going to break it, come back, then go to the target. So it can fake you out of getting out of your trade on the lower time frames. This was a so 38.2 retrace. And now it's bouncing back. So that was a good decision. I was a little late getting in, but it was a good decision to go long when it reset, right?
Right.
And at the peak, it'll give me 15 pips. And then this should become a 1 ball and the 3 ball should start going up. So a lot of times when you're looking at it historically, you don't know, like, look at that. This took it out. When you see the pattern, the 1, 2, 3 pattern, you don't know if the ball was here because history won't reflect that.
Right.
So that's why all the historical trades work out 100%. US dollar faces selling pressure after US inflation report. Okay, go.
See, that's the patience part, right?
Yeah.
Where if you would have just waited, then you would not took that loss earlier.
Correct.
And you could have put multiple positions here.
Absolutely.
And already been up 30, 40, 60 pips.
Yeah. Okay.
And it's a cleaner trade.
Yeah.
So on the shorter time frame, I'm expecting this to come back here, tested after the break. And which means either bounce off of this or come back a little lower and then go. So this little leg is going to be a test and bounce up. On the H1, it may not show the test. It may just go straight up.
Okay. Excuse me.
But this trade, if it works out, will be a 40 pip trade. Just a matter of when it'll work out, right? So, like on this 1 minute bar, it didn't, 1 hour bar, it didn't show the retest of this slope. Whereas on the 5 minute, it shows the retest right here. Here's a retest. Now the gold is trying to get back into trend.
I'm just watching it. It's just not quite there yet.
No. I guess Bailey must have stopped talking. Yeah. Or his report is out and no derogatory effect on the pound.
That's why the pound turned around and went long.
Yeah.
Is it going up against the yen? Yeah.
Yeah, everything's bouncing.
Pound New Zealand on the way up. Pound Aussie.
The best trade today was the pound New Zealand and the pound CAD long. And the pound Aussie short. Man, that thing ran. I missed that completely.
Yeah.
Right now, the USD Swiss is just zooming down.
Well, then the Euro US should be zooming up, and it is.
Look at that.
So the Euro US is going for, yeah, it's going for 110.
So when you trade your prop account, John, are you going to be doing that thing again, the corresponding or pairs, things like that?
Inverse relationships?
Inverse relationships, yeah.
Not really, no. Unless it's the Euro US and the US Swiss, I don't trust the others.
Okay.
Not in the current, not since Brexit. Like the pound Swiss and the Euro pound used to travel in opposite directions like you wouldn't believe.
Right.
I was in automatic, and at one stage I thought when I was back in the day, I was trading nothing else, only the pound Swiss and the Euro pound.
Right.
I'm doing very well, but then when Brexit came, it changed all of that. Pre-Brexit and Brexit and post-Brexit changed it all. Okay, it's some days it happens and some days it doesn't.
Okay.
Okay, where am I now with this trade? I was up 20 pips on the pound US. Only up 16.
Oh, you must have gotten in earlier than I did.
No, I saw 20 pips on it.
Yeah, we were up 20, but now it's up 16.
Yeah, I'm up 16 now, 17.
Gold is getting back into trend, right?
Pardon?
Gold is getting back into trend. The moving averages are not, but the stochastic is getting back into trend.
Yeah. But the 1 minute is cycling down.
I'm closing the pound US here. 17 pips.
So it's not, it's something's not quite right there.
Correct.
Yeah, and gold, right. That's probably the moving average is not set on the 5 minute. So there's no momentum in this up move, basically.
Right. So how the 5 is trying to move up and the 1 minute is moving down.
Yeah.
It don't make any sense.
Dollar index is trying to start up again.
That's usually, you can tell one of the ways to tell a range.
Yeah, well, things are doing two totally different things.
Yeah. Now look at that too. 1 minute is really coming down. 5 minute is also coming down. It's just the stochastic hasn't changed. It'll change in another 2.5 minutes. So many add-ons that we missed. Yeah, missed an add-on over here. Okay. Just wait for it to cycle back up and you take another trade. Man, how the hell did he get 227 pips yesterday on gold?
Cool,
That
right?
thing barely moved.
I just caught the swing. And I had like 6 or 7 positions, something like that.
Okay. So you're just trading the swing on the time frame.
Yeah, I think it was a 15-minute swing up,
Okay.
1 hour. It was 1 hour and 15 minutes. I forgot what it was.
So you don't really care about the other time frames. It's just that particular time frame you're trading.
Well, yeah, at that moment, that's what was most
I
relevant.
just entered a short on gold.
Okay.
The stochastics on the 15 are definitely turning down.
Yeah.
I should have waited for it to take out that yellow ball under 1 minute.
Just haven't come out of the 80 yet. So if this gives you a change of direction here, you're out, correct? On the 1 minute.
Yeah.
Santiago?
Where's the 5-minute doing? Hold on. I'm not there yet.
5 minutes is trying to poke its head out, so it's trying to come out. I'll take my profits here.
All right, and just let it set up again if it's doing it.
Yeah.
You don't have to fit through no drawdown.
Yeah. Okay. I'll go short on gold. So the 15-minute is turning around.
Yeah. And the 5 is getting into a change in direction too.
Yeah.
Got in a good time there.
Yeah, I'm up 23 pips on gold.
Yeah.
You should be up quite a bit.
That's the key thing when you start getting these change in directions, you get a big boost of energy. Because the 1332 is crossing the 50.
Yeah.
So you tend to get a nice boost. And the 15 is probably end up changing direction too if it keeps going down. All right, cool. We try to take that low out again. Like they sweeping the highs and lows.
Yeah.
They may be trying to do that.
Yeah, damn
It moves so fast.
it. I know. I took my office for a second. I was after coming back about 15 pips against me. Hold on.
So at this point, you need to you ask yourself: Is this a long-term trade, or I'm just getting what I can, what I'm getting, I can get out of the market as it's
Yeah.
moving. So
Yeah, I'm gonna close it 15 pips. Wait for the 1 minute to set up again.
Yeah, I got 30 pips out of it.
You got it earlier than I did.
Just a minute. A minute is a minute two at the most.
Yeah, that was enough for board.
Yeah, well, you know, it's gold is fantastic when you're in it and it's moving that direction, but it can turn around in a heartbeat.
Yeah. Okay, looks like pound dollar is also going short. Yeah.
Oh yeah, gee whiz. They're bang at it today. They're bang at it today, I'll tell you now. They're playing every trick in the book today, so they are. It's come down 20 odd pips already.
Yeah.
All right.
So it works out, it'll be a 17 pip trade.
Yeah. I'll get back to gold because gold should really be going flying down. See, gold moves before the other pairs, you know. As in gold is it's in the US dollar, it's the XAU USD, so
just moves so fast, you know.
Pardon?
Just moves so fast.
Oh, it really does, yeah. Be lightning fast. Anyway, I got 30 pips out of it.
that's why it's so easy to scalp. It's easier to scalp gold.
Yeah.
Because you get those bursts of directional moves.
Right.
You just in and out. You're in and out 30, 40, 50 pips. And you don't have to sit all day waiting for 30 or 40 pips.
Yeah, it could go 30, 40 pips against you too.
Well, that's what I'm saying. You use the indicator properly. It shouldn't reverse like that unless some news come up.
Right.
If you're following the rules, you should get into trades where it's in that moment and moving in that direction. You just need to know when to get out.
Yeah.
Under the situation you're in, like here, you don't know which way they're trying to push this market. You're in between, the London high and low.
Right.
And they pushed it down, then you get out, and now you wait to see, okay, what's next? What are they trying to do now? They could be trying to push it down again, or that was a stop hunt, or trying to set up to go long again. Who knows?
I mean, look at what they're doing to the pound dollar. 1 minute is bullish, 5 minutes is, again, same situation as gold.
But the way you stay out of that is when you go to the 1 minute.
I am on the 1 minute.
Like, okay, yeah, with the 5 minute was cycling down, but the 1 minute had peaked out.
Yeah.
So you would have to wait till the 1 minute sets up again.
Here we go.
See,
Gold short again.
Yeah. Did you take it? Yeah.
Yeah.
Yeah. Oh, you and me.
So what you were talking about, Santiago, the gold is a perfect example of that, right? 1 minute was moving in the opposite direction and then
right.
came into conformance with the 5 minute. Now it's going back up. Now I've got 39 seconds on this candle. Let's see what it does. Second trade. Come on.
You add to it?
Yeah.
Yeah.
Even the 15 minute is kicking in, so I'm gonna add another one. All right, that should be enough.
I was say you might want to wait till that actually kicks in.
Oh, okay.
Because you
Yeah,
get
this could
lucky.
be a false.
You can get lucky and it pushes hard, finish the 15-minute finish hard, and you're
Right.
in good. But if it decides to pull back a little bit, then you'll be in the negative.
Yeah.
But it's moving down pretty hard, so it could finish strong.
I'm up 22 pips. That's all I need. 27. Yeah, you're right about gold. You know, you can make it 30 pips very quickly.
Oh yeah. It's you only need that one pair.
Yeah.
And if you just wait for the right timing when everything is setting up and continuation, and when it's getting out of sync, you leave it alone and get back in sync, then you get back in.
Right.
You get it.
Look at that. Got out too early. Now it's going to make me regret it. You still in your trade there, John?
Yeah.
Yeah, good. Okay, come on. Yeah, the H1 is not starting to kick in.
You see, the more and more I'm doing this, I'm starting to not even look at my indicators on the bottom.
Yeah.
I just look at my stochastics. And
even this?
Yeah, but I got all the stochastics on one line.
Right.
And I just look at them and see which time frame is setting up, and then concentrate on that time frame, and then time it from the 1 minute all the way on up.
Yeah.
I know when to get out, when not to get out, when to stay in a little bit longer. Or
I mean, H4 has started down. H1 is joining the party. M15 is setting in. Yeah, this is a short trade. There's no question about it. Stochastic price, that is. Yeah. Okay. You're talking about the histogram thing that I gave you before. The way you put it individually, right? The 3 time frames. I mean, the 3 stochastics for each time frame, right?
No, I have that on. But I'm talking about just the regular FFX stochastic.
Oh, FFX. Okay. Man, it hit my target. Oh, well. Hey, it's come all the way down. Look at that. And it came all the way down. It's going to take out the apex bar. There you go. Just took it out. If you're still in your trade, you're doing good.
Yeah.
Should be up about 50, 60 pips.
So now go over. This is a total sign. Go over to your 15-minute chart.
All right, I'm closing out here for 200 pips.
Oh, geez.
Very good. That was awesome. Huh?
Just bounce a little bit off that apex bottom. So
Yeah.
All right. So you see all 3 stochastics are in a rope.
Yeah.
No, look at your actual stochastic.
Yeah. Okay.
They're moving down together. There's a lot of strength in that.
All right.
is that what that means?
Yeah. You got
Okay,
all 3 lines moving together, or 2 of the lines. It's either going to be the green and the white line moving together because the
Like that here.
The magenta's already up there.
Yeah.
Or if everything's turning around together, then all 3 will be moving down. That's a lot of strength in that market. So there's you know it's gonna cross and give you a change in direction, which is gonna give you even more directional moves.
Okay, I'll just come over to the pound US. Yeah.
Took the trade down here. I should have taken the trade here. Yeah. Should have been up. 8 pips already.
Up 4 on that.
Huh?
Pound US.
You're up already, you said?
Yeah, I took it at 1634 because I'm an idiot.
No.
Yeah, look at that.
Took it at the right time.
Jeez.
Gold still going?
Yeah.
About to hit the weekly pivot.
Shit.
And that was the original target, was the weekly pivot.
That was I left 150 pips behind me. I chickened out.
200 pips, you can't be chickening out.
It's not worth getting out of bed for.
Okay, so there's the weekly pivot that's going to hit. I'm up 25 pips on the pound dollar. I'm out.
Pound dollar, you're up 25 pips. How come you're up 25 pips? You took it before I did then.
I took 3 lots.
Yeah. How many?
3.
Oh, good lad. Well done. That's good trading now. I like that.
But I was late. So, and then when the magenta went below 50, I took 2 lots right away.
Okay. All right. Good trading. Well done.
So the lesson learned here is, well, there are multiple lessons, but it's better if you're scalping, it's better to trade the stochastic on the time frame with at least the next time frame supporting it, correct?
Right. Let's say you're on the 5-minute.
Yeah.
You want to know what the 15 and the 1 minute are doing to support your 5-minute patterns. And
so basically, for our case, we are on the 1 minute for the 5 and 15. All right. So
Right.
this was the entry right here to go short.
Right.
Now, this 15-minute is not set. It's still setting, and the 5-minute is set. 5-minute is already set, but the 15-minute is not set yet. But it's still in anticipation.
Right.
So
But
it's a quick in and out trade.
right. If you go to the 15-minute chart, you see that your 15-minute stochastic was trying to cycle down.
Correct.
So
Yeah.
that's your directional move, the cycle, because it's not, there's no pattern there yet.
Yes.
So your
That's what I
5
mean by saying that it hasn't set just
Yeah.
yet.
Okay.
Because it needs 15 bars on the 1 minute, for the 15-minute to set. And this needs 5. So another minute and this will be set. The 5-minute, well, 1, 2, 3. Well, 5-minute was already set in the down direction. The 15-minute is kicking in, but it's not set. So this actually was a 5 lot trade right here. And that'll be at least 45 pips because of the 3 time frames matching. But I get what you're saying. So you trade the 5-minute and make sure the 1 minute and the 15-minute are supporting the 5-minute, essentially, right?
Right.
You get that, John?
Yeah.
Because I'm not trading the 1 minute because the 1 minute cycles are so short. The 1 minute is just for support and backup as far as
Well, the
time.
1 minute is the entry trigger.
Right. Right.
This is the trading and this is the direction.
Right.
So it's basically a 15-5-1, but we are using the stochastics to measure the movements.
Right.
I mean,
So-
I have the 1 hour here for the longer trade. So if the 1 hour is already set in these directions, then I just let the trade fly,
Right.
that kind
Right.
of thing.
Right.
But if the 1 hour is not set, then it's purely scalp. You just play the trend,
Yeah.
assuming that the 15 and the 5 are in the
So,
same direction.
Go to your 5-minute chart. All right, so you didn't have a pattern until later. You got the change in direction.
Yeah, and you'll see the pattern. Right now, the pattern is not set, but the 5-minute is not complete, right?
So
If I go, hang on. If you go to the 1 minute, when it turned red, that's when you got the pattern of the change in direction.
right.
Right here. So the only thing that this doesn't show you is a 60, where the 60 is, whether it's a change in direction or a trend pattern.
So usually I like to scalp when the 5 minutes in the actual pattern.
Okay.
But in a situation like this where the market has peaked and it's trying to turn around, then I look at the 15 for the cycle down.
Mm-hmm.
Look at the 5 for a cycle down. So when did the 5 start cycle? When did the 5 start cycle down?
Right here. Right there.
All right, now go to your actual 5-minute chart.
Right there.
All right. So because there's no patterns on the 5, then the 1 minute would be not my actual. It'll be my entry, but it'll be my patterns. So as long as my
There's
1
the
minute,
pattern, right?
yeah, as long as my 1 minute is in pattern to take shorts, I'll take the shorts.
Okay, so this is a short exit, short, exit, right?
Right.
So enter here, exit here, enter
Right.
here, exit here, or exit here.
Right.
So these are your scalps. Does that make sense to you, John?
Yeah.
Well, your scalps will start a little further on this one.
What do you mean?
Go on your last bar.
Yeah.
No. Your
This one?
vertical line. Your vertical line.
This
No,
one
the
or
next
this
one.
one?
That one. Move it to your left.
Yeah, I mean,
I just went short on the pound US again.
this is the entry.
Right.
And there's the exit.
Yeah.
So somewhere in here, I mean, that's 14 pips. So
Right.
take 3 lots, that's 50 pips, almost 50 pips.
Right.
And then this one here.
Short on gold here.
Oh yeah, another short. You're right.
It's too close to the mark.
Yeah, just be careful because
Yeah, it's too close.
This is already cycled down. Yeah.
you at the end of the hour.
Yeah.
Yeah.
It can give a boost down, but at the same time it could just lollygag around here, pull back or whatever.
Right.
So the best logical thing is just to wait till the next hour and see how everything sets up in the next hour.
Cool. Yeah.
Because
I took it anyway.
4 pips. Got 4 pips. Okay. Yeah, I mean the ideal thing would be to wait for the 5 minute to recycle.
Yeah.
Right?
Yeah. I'm still looking at that 15 minutes stochastic. Yeah. It's bottoming out.
Yeah, it's strong. But the next logical trade would be 5 minute cycle and then 15-minute cycle.
What's logic got to do with it? We're trading currency markets and we're trading gold. Logic doesn't apply.
It was what get you out of trouble.
Okay.
Get you out of trouble.
I don't want to get out of trouble. Okay. I like trouble. Okay.
So by the same token, this was a long trade, right? Because the 15 minutes was already said, the 1 hour was already said, 1 minute got into trade over here, and there's a trade.
Right.
And your exit is somewhere in here.
Right. I mean,
that makes sense. That's 20 some pips. So that's 60 pips, three lots, or 40 pips, 2 lots. I mean, 2 trades. Okay, that makes sense. I've been waiting too long to get out, but this bodes well for the moving average, also crossover also. Yeah, okay, makes sense. I don't know if it's making sense to John, but it's making sense to me.
Yeah, you're looking at the 15 minutes for direction.
Right. Yeah, I mean the 15 minute is already in a pattern, which is basically a direction, right?
You're looking at the 15 minute for direction, and then you're going back to like on the 15 minute on the gold here, right? You pull up the 15 minute. There you go. Now go look at the stochastics themselves on the 15 minute time frame.
Yeah.
You see right there at the very top. That's where it was starting to turn around.
Right. So
that's where it dropped like a rock. So from there, you come back down to the 5 and the 1. You can go back. Yeah, there you go. There you
go. So what I'm saying is on the 5, you already know where the 15 is turning by the color.
Yes.
Okay.
Yes.
The 5, I mean, the 15 wasn't ready, right? Till here.
Yeah.
Right there.
Right there.
And the 5 was ready. So if I'm looking at the 1 minute chart, it's for a pure scalp, right?
Yeah.
The fresh one was here, right? The fresh entry was here.
Yeah.
When it cycled back down. And then the exit is here when the green line cycled back up. So this trade would have given you 120 pips. Okay.
Yeah.
And that's what I need to get better at. I understand what Santiago is doing. I think I said this before that I understand, but I obviously ignored it before. So,
and there's another thing that you have to bear in mind that this is in the context of what happened on the news move.
Correct.
Right.
This isn't necessarily the context which will apply for every day.
No, this applies every day. The news was over here.
Yeah.
This is after the news.
Right? Yeah, I appreciate that, right?
And then this is still now the patterns come back into play. The indicators.
Yeah.
And this was being supported by the 1 hour also moving down, right? Cycling down.
Yeah.
Right.
So that's why that's the key, that the 1 hour was cycling down, right? Let's take another. Let's get rid of all of this. I'm going to assume we're done trading.
Yeah.
We are, right?
Yeah.
Okay. So if we look at, where's my thingy? So I can get back. Let's go to yesterday or even the Euro session. So here's the Euro session, right? For gold. We come down and say, okay, the 60 minutes starting to come down, right? When these start to print. This is not confirmed on the 60 minute, but this is starting to show a trend. Okay. I need feedback, guys. I don't know if I'm talking to you.
No, we're following you.
Sorry, no. I'm just trying to follow you. That's all right. You're
okay. So then when the 15 minute was already starting to show a trend, and then this was a change in direction, starting the change of direction as a red, right? And the 5 minute was already overbought. So it was in a pattern already. So where is the trade here? The trade here is the fresh on the 1 minute, which happens here. Okay.
Yeah.
And the exit on this one, if you're scalping, is right there. So this one is a break-even trade. The next trade entry is here. It's all because all of these are in pattern, right? And again, this is a break-even trade. So these are heartbreakers, right? So here's a trade which gives you the money.
Now go
ahead.
Go back to where you first got in, your first entry.
Right there.
Okay. Now go to your 5 minute.
Five minute was already in pattern.
Okay. Now the difference between this trade and the other trade was the beginning of the other trades is that the 5 minute was not in pattern, was still a cycle down.
Yeah.
So because the 5 minute is in a pattern, you can you can get in and don't have to get out on your 1 minute until your 5 minute gives you a exit.
Okay. So the 5 minute exit happened here. Right? When the green line on the 5 minute comes out. So let's say
good eye.
So this is the 24 pip trade. Okay.
Right.
So this is something I guess we have to write down and review. I mean, you already know, Santiago. It's just for me. I have to write down.
Yeah. So if your entry time frame is in a pattern, right? If your 5 minute, put it this way, your 1 minute time frame is your entry and your timing, right?
Correct.
You're not necessarily trading the 1 minute. That's just for timing.
Correct.
So if your 5 minute is in a pattern, then you don't have to get out on your 1 minute until your 5 minute is giving you is peaking out and is telling you it wants to get out.
Right. So the difference you're indicating is, let's say that we have 3 time frames. The first time frame is the trigger time frame, which is the 1 minute in this case.
Right.
The second time frame is your trading time frame, which is the 5 minute in this case. Right. And the third time frame is your trend time frame, which is a 15 minute. Okay.
Right.
So let's just talk, regardless of 1, 5, or 15. Let's just talk that way, right? So the difference you made, the delineation that you made on the trading time frame was whether it's in pattern or not, or is starting to form something, right?
Right.
If it's not in pattern and your entry time frame gives you an entry, then your exit is on the entry time frame because your 5 minute is, or your trading time frame is not in pattern yet, right?
Correct.
Now, if you enter on the trigger time frame with the trade time frame still trying to form a pattern, but you don't get an exit on the entry time frame and your trade time frame gets into pattern, you still stay on the trade time frame. So as long as your trade time frame is in pattern, you stay on that pattern on that time.
Right.
Now you need a support on the trending time frame, and the trending time frame can be, just starting the trend, right?
Right.
And that doesn't matter as long as that remains in your direction, which is going above the 50, below the 50, and below the 20, basically the 3 colors.
Right.
you're good. But your entry is on this and your exit is on this as long as the middle time frame is in pattern.
Right.
Okay. I need to do some charts and document it.
It helps you differentiate how you're going to treat that trade. Is
Correct.
just going to be in and out, in and out, in and out,
Correct.
or I can get in and wait.
Correct. So something like this.
So like if the 15-minute is in a pattern, then you have flexibility
Yes.
to get in and out on the 5-minute, or just let the 15-minute follow through.
Yeah, like here, the 15-minute came into pattern right here.
Right.
I mean, this is the change in direction, assuming that the 61 wasn't following, and this was your basically your strong. But this would have been a late exit over here. My exit at that point would have been this 5-minute. The stochastic, both of them getting out of the 20. That was last absolute exit. But okay, so like this trade here, come on. Why is it so slow? Okay, so this is starting to get into a trend, but it's not in a pattern yet, right?
All right, let me, it's kind of hard to you have to go to the 5-minute chart.
Yeah, the color tells me that it's below the 80. Yeah, it's starting to get below the 80. So it's starting to get into a trend, but it's not in a pattern just yet.
Right.
The 15-minute is, if you look at the 15-minute at that point, the 15-minute doesn't have anything.
It's like trying to cycle down. So.
Yeah, it's trying to cycle down, but it's not, the 13 hasn't come below the 80 just yet.
Right.
So it's not in a trend pattern per se just yet. Okay. And the 1-minute is giving you an entry based on the trend on the 5-minute. So in this case, the exit is on the 1-minute,
right,
which is right there. You're not waiting for the 5-minute.
No.
But the 5-minute gets into trend, so you can take the exit here, which is a little later exit, but 16 pips versus versus 21 pips. That's 5-pip difference. Could be a make or break day. I mean, if you're just going for a certain number of pips, it doesn't matter. You just take those pips and you're done. Then again, you come over here and you say, okay, the 5-minute is getting into a trend. Here's an entry, right? Trend entry right there. Then the 5-minute gets into pattern. 15-minute gets into a trend, and the 5 minutes gets out of pattern here. So this is your absolute exit right here, let's say. And this becomes a 34 pip trade or 39 pip trade. Am I reading that right?
Yes.
Okay. All right, so I just need to document this. Now, the pair we trade, let's go do that. Let's see how that would have worked out. And you're on the 1-minute, take all these lines out. Back to the Euro session. Okay. So when we came in here, you're looking at the 5-minute to say, okay, there's no pattern. There's a pattern here that starting to get into a pattern. My fresh entry on the 1-minute is here, but the 5-minute is not in the pattern. Okay, so 5-minute pattern is here, but I've already missed that entry, right? Right, Santiago?
So why is your 5-minute not in the pattern there?
There, because they're both pointing up. They were both pointing up.
Yeah, but it's still in a it's in a pattern.
Oh, I see. Okay, they're in a
It,
pattern. You describe them. Okay, that's fine. So the entry is here. 15-minute is in a pattern or starting a pattern. And your exit is here. And that would have been a 13 pip trade, 11 pip trade, 11 pip trade. Okay. Then you come back over here and say, what's going on here? And see the 1 minute is going up. What is the 5 minute doing there? 5 minute is not in a pattern. It's just the 5 is pointing up. So that's not a trade. All right. And then you come here again. And now the 5 is in a pattern, is starting a pattern, starting a trend. 15 is starting a trend. So let's see, 5 minute. 5 minute is still not in a pattern. It's just a trend that started.
yeah, it's peaking. So it's
Yeah.
trying to get back into trend.
Correct. So you got to wait for that. And the 5 minutes starts a pattern here.
Right.
And the 15 minute is already in a pattern. So this is your entry. And your exit.
So go back to your 5 minute.
Five minutes started a pattern.
No. Like when it was swinging up. Put your line where it was swinging up.
You mean here?
Yeah.
Okay.
And now what's your 15 minute doing? What's your 15 minutes stochastic look like?
It's also swinging up.
Where are we at? Where is it at?
Right there. Swinging up.
Okay. So at that point, to kind of stop, trying to trade every direction, right? You got to say to yourself, okay, I just came in the 15 minute just gave me a change in direction, right?
Yeah.
And now it's trying to cycle back. It's trying to cycle up. What is my 5 minute doing? My 5 minute is already in the pattern and is cycling up.
Yeah.
So the next logical trade will be wait for my 5 minute to get back into pattern.
Correct.
That avoids you to not even look at the trades going up at that point and wait for your next signal down.
Okay.
So you don't get enticed in trying to take those moves up on 1 minute patterns to the upside.
Right.
And you avoid all that sideways and crap.
Correct. So this is my trade. Sorry, I don't mean to rush you, but
no, I was done.
This is a 6 pip trade. Now you come over here.
Like what pair is this?
Pound dollar.
Oh, I know.
And here's your 5 minute, 1 minute. Here's an entry. Here's an exit on the 1 minute, 2 pips. But really your trend is down. So you're looking for a down trade. And there's another trade. 15 minute is not in a pattern. So let's look at the 15. 15 is peaking and trying to get back into trend. Okay, so that's good. So if I take my trade here, by the time the exit comes on the 1 minute, okay. Either that's an exit, or I can say my 1 hour is in trend, but I don't look at the 1 hour. This is a dilemma, right? This is an exit right away.
What was your 5 doing at that point?
5 is trending down. still trending down. 5 is still trending down.
Right. So you're still in a good pattern on the 5, so you can stay in that.
Oh yeah, got into pattern right there. Okay. All right. And then you're definitely out over here.
Yeah, and wait
That's
for
a
your
break even, right? So then your next trade short is here. Everything looks good. 15 gets out of pattern here, and that's your exit. 5 pips, right? Even though the 5 minutes is still in pattern, 15 gets out of pattern. We look at the 15 over here. This is the green line poking its head out of the 20. Right there. So that's definitely an exit. Okay. I think it can suffice for my needs anyway. What about you, John?
I'm good. This suits me. Suits me because I just, you know, as I was saying to you earlier today when I was talking to you, like this whole 5-minute thing seems to work better in the day trading scenario, especially looking at prop firm setups and everything. So
I mean, you can take multiple lots, right? When these all 3 are in pattern.
Yeah.
All 3 are in the same color.
Yeah.
Even if you get 5 pips, if you take 2 lots, 3 lots, that's 15 pips.
Yeah.
And if you're going to 15, 20 pips, you already made enough money here. You may not even be looking at it over here. You take 2 lots over here, that's 22 pips. Technically, you met your quota. Get greedy, you can take another 10 pips here, another 10 pips here, right?
I mean, I'm just...
Go ahead.
When the candle is in all the indicators at the bottom are the same color and everything's in the right direction on the 5-minute or even on the 1 minute, you can take a trade.
Yeah.
So, you know, you might get 5, 6, 7, 10. You might get a big move and you could get 15 or 20 pips out of it.
Right.
And I don't know, the more I try to do it the other way, the more I realize that this is the way to do it, because this scalping thing, call it what you want, seems to work with this system. And as long as you're not looking for too many pips out of it, you won't be disappointed.
Right. It's when you get greedy that you get knocked out.
Ultimately, the market is the winner, right? All you're looking to do is to get some pips out of it. You know, you're not looking for everything. You're just looking for something.
Look at what Pound did. It's a Smith 17 pip trade.
You know,
I mean, based on what we're talking about, this was definitely an entry right here.
Yeah.
And we don't have an exit yet. So definitely 17, 18 pips.
Yeah.
And the 5-minute is still in pattern. So now that I understand it better, I think it's just a matter of practice. Here's another trade. 17 pips, 20 pips. My God, is that easy, San Santiago? You've been keeping this to yourself.
Yeah, you haven't been listening, man.
Yeah, blame it on me. Sure, go ahead.
I don't know how many ways. I don't know how many ways to tell you the same thing over. But I mean, you have to do this live like we're doing now.
Yeah.
To actually get a grasp of it and the timing and all of that. Then you start realizing, okay, I need to wait. I need to wait. I need to do this. I need to do that. Because going back in history is fine. You know, everything is set and it looks perfect.
Yeah.
But then you start seeing live, it looks as perfect as it does as history.
Don't say that. John will go again live. Let's look at it.
Live.
Sorry, John, just pulling your leg.
I know, man. I know. But like at the end of the day, how can I?
Yeah, live is what matters. Yeah,
you pick up the patterns from the history thing, right?
Correct.
Right.
But you pick up the knowledge, the trading experience and knowledge from the live thing.
Correct.
And that means making a lot of mistakes, to pick up what's really happening. And
But the analysis is to solidify what you should be doing.
yeah.
And then hopefully that translates into live, but it's not in one-to-one match, obviously, because the prices move. I mean, the market makers move the price. But if you train your eyes to see what you should see, or what you should be able to see, at least you avoid some of the mistakes we've been making. That's all I'm getting at.
Yeah.
And if you can do that, I think we should be okay.
So like go to a 1 hour chart.
Which pair?
It don't matter.
We'll take your favorite pair.
Go.
Okay.
All right. So when does look at a point where the market is just getting started? There's no patterns here. You're just getting a 1332 crossing over the 50.
Oh, you mean, yeah, that's a pattern, right? So right there. Oh, come on. Right there.
All right. But that's an instant pattern, right?
Okay, you don't want that.
Yeah.
You don't want that? I can get you now.
Go to your right. I want something that is already the 532 already crossed and 1332 hadn't crossed yet.
Like this.
To your left.
This one here.
Okay, yeah.
Yeah.
So I'm seeing that on the 1 hour.
Uh-huh.
All right. So when I see that on the 1 hour, I'm thinking, okay, the next trade is gonna be when my 532 cycles up and it comes back down, and that's when I need to start looking for a trade.
All right.
Sure. When it's starting to cycle back down.
Okay. It'll be right there.
All right. And now I have a
continuation trade.
A continuation trade on the 1 hour.
Right.
So as you go looking through the pairs, you look at what time frame is what's going on what time frame. That will give you an idea of how long you're going to be looking at this pair.
Okay.
So if this was a 4 hour chart, and let's go to a 4 hour chart. And look for the same thing on the 4 hour chart.
Right there. Yeah, 13 crossed, for 5 was already a...
Right. So you know that you're gonna be trading in that direction on this until the 4 hours finish cycling up. And the next logical trade is gonna be when your 532 tries to cycle down here, didn't cycle down much. Right. No.
Well, there was no pattern. It was just
right. Well, no, you got that right when it crossed. You got the 532 cycling down to your left.
You mean here, right?
No, right there where you got the line.
Yeah.
Your
532. You mean here?
No, the line where you at the current line that you put when the 1332 crossed over.
Yeah. I mean here. Right?
No. Crossed over the 50.
Yeah, it's right there. Okay.
Right. At that point, the 532 was cycling down. So
correct.
The next trade is going to be when your 532 starts to move back up again. So now you know.
Okay.
It's a small cycle. It's not your ideal cycle like you have. Okay, move over to your left.
Where? How far do you want to go?
Where that 2 ball is.
Yeah.
More to your left. The peak in the bottom 2 ball.
That one, right?
No, the next one to your left. That one.
Okay.
Okay. Where did you have the 1332 crossover? Right there. Now, if you're looking at the 4-hour chart, you know that you have to pay attention to the 4-hour chart, because when the 532 cycles down, you're looking for it to cycle back up into a continuation or trend trade.
Right.
That's going to be your next logical trade for this pair at that time.
Which is right there.
Right. Well, even before that,
This is where it starts. I mean, if you do it here, it's below
right,
the
yeah.
50.
Right.
This is where it finishes above the 50. But now, if you do this and go to a lower time frame, it's probably starts printing the.
Right. So you know that this is a 4-hour setup.
Mhm.
Now you know you have a longer trade for pretty much the whole day in that direction.
Yeah.
So you have your directional trade for that direction. So depending on what time frame you see a specific pattern or setup, it tells you how long you're going to be messing with this trade, in a specific direction.
Okay, so if I look at it on the 15-minute chart, right? Because I have the 4-hour. I can get to it. Yes. There it is. Okay. So I have 3 lines, right? 1 line, okay. So this was the first line, the 2-hour ball. I mean the 2 ball, right?
Mhm.
Then the 4-hour 13 crossed over here. This is the 4-hour.
Right.
Okay, and then we are looking to see when it crosses back up, and that happened here. So now, if the entry is on the 15, because the 15 would be the entry point to that, and there's the entry, that's the trade right there.
Right.
And
don't move away from don't move away from there yet. Don't. Right?
No, I was just saying that the exit is right here. So this is the 367 pip trade.
Cool trade, right? Cool.
Yeah.
No, but you see where you got the cross of the moving averages at exactly that time.
Yes, that's the 5 and 13 crossing at the same time above the 50.
But it's all everything is set there. Everything.
Mm-hmm.
And that's on the 15-minute.
Yeah.
When you set that trade, you should be able to put in place a target for it to hit.
Right.
But I don't see that target outlined on your 15-minute chart.
That's because the pivots are only doing the last 3 days, and this is a week and a half from the past.
All right, okay.
But if you look at this and you go to the 4-hour, there's my entry. My target is right there.
That's what I was going to say. Right. There's your target. Right. So
Yeah.
how many pips would that have been?
Okay. So let me draw the horizontal there.
Right now. And keep that. Don't move that horizontal. Whatever you do, don't move that horizontal.
Yeah. So this was 272 pips.
Okay, Grant. Hit your target.
Yeah.
Okay. Now, just go live. Right. It's after coming back down to it, come through it, penetrated it, bounce back up for it on the news, right?
Right.
Came back down to that target again.
Right.
And it's important to go have a look at the daily on that now, just for a moment, right? Right, you're there now. See it?
Daily high. Yeah.
Yeah, go back to the 4-hour. And that's right on the outside left there. You have a red ball.
Mm-hmm.
So it's come back to that target, penetrated it again on the way down.
Yeah.
And it's gone back up to test it again. So strictly speaking, this should go back down from here, right?
Right. This is the 1, 2, 3, right?
Yes. Right.
But what Santiago is saying is that you got to wait for a pattern to develop, right?
But that's that's why I'm asking this question, right? On this system with that setup, where's your confirmation?
Right. Here's a peak. That's the first line, right? The peak.
Yeah. Yeah.
The second is the 13 and 5 crossing over. So you should get a white
Yeah.
or a red line here, pulled down,
Okay.
right?
Yeah.
So let's just take this one here. This is a similar one, right?
Mm-hmm.
Except you don't have the yellow ball. So this is the peak. Here's your confirmation right here, where the 5 and 13 go down at the same time. Okay.
Yeah.
And then where's your trade? Your next trade should be somewhere in here, but you already got another peak. So there is no other trade to the downside. Okay.
Right.
So this is not your trade. The trade is the continuation trade, something like this, right? So there's a blank here, then gives you another line.
Okay.
This was not a continuation of the moving average. So you know there was a violation here, right? This thing started to move up. That's where the blank shows up. Correct?
Yeah.
So you already know the overall direction is going north on this one, right? So you look at this peak, look at this crossover, and then you try to find a trade which you don't find, right? There's no continuation on this pattern.
Right. But that's just looking at the 4 hour. You don't have a actual trade set up as far as the next logical trade
On the 4 hour.
Because it's trying to peak, right?
Correct. So
but
you lower your time frame. I'm going to get rid of these lines if you don't mind. John?
Yeah, go ahead. Yeah.
Okay, so now, where's my thingamabob? So I go down to the 1 hour time frame. I say, okay, here's my peak. Hit this. Okay, here's my peak, right? Correct?
Yeah.
Where's my 5 and 13 cross, which happened here, right?
Yeah.
Where's my continuation after this? And that happens here. And that's my trade.
Right.
So you have an origination, which is a peak. You have a confirmation, and then you have an execution. Okay. 3 steps.
Right.
All right?
Yeah.
Now, let's look at the same thing on the 15-minute chart. Okay, so here's your peak, right?
Yeah.
Here's your cross, right here, right? And here's your continuation right here. Now, for me, obviously, it's not going to work because I don't trade between sessions. But for you, there's a trade. Okay?
Yeah.
This is a 111 pip stop loss. So you have to calculate your lot size. Okay? And where's your target on this? Your target is, you can take it from the H1, I guess, that better one. Target is here, right? Correct?
Yeah.
If you took an entry here and you went through the end of the day to the next day for your target, that's 400 pips. And that's on a 15-minute. Now, you don't have to take your execution on the 15-minute. Correct?
Mm-hmm.
You don't have to wait for this. You already know your confirmation and things have happened. You can drop it down to the 5 minute and look for your entry. Correct me if I'm wrong, Santiago, but I think you can do that, right?
Right.
So here's your entry right here. This way your drawdown is lower, 70 pips. And you set your target and everything on the 15 minutes. So you're just following the 15 minute to your target. And this one will give you 480 pips. That makes sense to you, John?
Yeah, I have it. I just went short on gold.
We've been skipping steps is basically what I'm saying, and we shouldn't be skipping those steps.
Okay, but I just saying on the 1 minute chart right now, I took a short on gold. Because the 4 hour is cycling down, the 1 hour is cycling down, the 15 is starting to turn back down again, and the 5 has had a recycle and is cycling down.
Okay, so let's look at it.
Okay.
15-minute peak is here, right? This one is the peak. What is it doing now? Has it given you a confirmation? This is a continuation right here.
Okay.
Actually, this peak to low end, I mean, this is a peak the way we are looking at it for a short trade.
Right.
Here's the confirmation right here when both of them cross, right?
Right.
And here's your continuation right there. All right.
Okay.
So if we drop it to the 5 minute, your continuation, yeah, that's still your continuation, right?
Okay.
There was your trade.
1732 on the market watch is when I entered it.
Yeah, right there. Now, where's your target?
My target is right at the bottom here.
The weekly pivot.
What?
The weekly pivot, right?
Yeah, that's where the target is, right?
Right. Or even this one here. That's 50 pips to 100 pips.
Okay.
Now, either it's going to hit the target or the 15 minute is going to go out of sync. Okay?
Yeah.
Either one of those is going to be your exit.
Yeah, my target on this is set at the weekly pivot, okay?
I understand, but if let's say the H1 goes out of sync before it hits the target.
Yes, and the reason I'm bringing that up is because the 2000 price point on gold is a very big sticking.
It's right there.
It keeps going back. It's kind of been breaking it to the high side.
Yeah.
And it's come back to it and come back to it and come back to it. It broke below it and came back up to it and then went higher and then came down below again, right?
Right. So maybe that's your target. I'm just saying that it's a 15-minute trend with a 1 hour in trend. So you could wait for the 1 hour to go out of cycle to take your exit, or it hits you. So it's either or.
Yeah, exactly.
I'll take a short also. And I'll set my target to this and put a line at my 2000. And I have now both my visual targets set. Where's my stop?
Well, your stop should be into break even by now.
Now I'm only up a pip.
Oh, sorry. Okay.
I just took the trade, right? So right now my stop would be here, above this bar.
Right.
And I just let it play out, right? I mean, it should work. The The only problem with this is the 5 didn't cycle all the way out and come back in, right? It just gave me a continuation, a small cycle here.
Yeah, but it had a reach. It like
it's not like this cycle, right?
Yeah, sure. Yeah,
sure.
Cycle. Right.
So,
but
yeah, it's still a valid cycle. Not discounting that, right?
Okay.
If it goes for 37 pips, it's going to hit my 2000 mark, right?
Yeah. That's if I see it getting to the 2000 mark, 2000 price point, and I see it hesitating, I'm out.
Well, I'll just set it to 2000. That's my target. Well, not 20,000, 2000. There you go. So my target is right there now. And when it comes and hits it, he takes it out.
No, but what I'm asking now is that I entered this on the 1 minute, okay, based on what the 15 and the 5 are doing.
Yeah, which is okay.
But hold on. Let me just finish, please.
Yeah.
Santiago said that he was using the 1 minute for timing entries, but he was really not looking at the 5 minute to decide whether to get in to get out, right?
No,
so he was looking.
No. On the 1 minute, stupid thing. On the 1 minute, you have a cycle on the 15 minute and the 1 hour, okay? And the 5 minute is in cycle already, right? So your trigger point was the 1 minute when it was actually here. I was a little late getting in, right? This was the entry.
Right. Yeah.
And the exit then, if we look at the 3 time frames and not the 1 hour, would be when the 5 minute gets out of cycle. That would be the exit. That's scalping.
Okay, so if you go to the 5 minute now, the 5 minute stochastics is not getting out of cycle yet.
No, we can see that on the 1 minute, right?
You have the 4 hour
right.
on your you have the 4 hour on your 5 minute chart.
Yeah, I don't need it. I have it there.
Okay.
Yeah, it's basically the 15 minute and 1 hour. I mean, the 1 hour is in cycle, so you can follow it all the way through the 1 hour, right? Or it hits your target, either one.
Right.
And just move this a little bit further out, so it gets okay. That's it. That's the trade. I mean, you're using 3 time frames.
Yes.
The lowest time frame is your target, your trigger time frame. The middle time frame is your trade time frame, and the highest time frame is your trend time frame.
Okay.
And ideally, you get out when the trade time frame gets out of sync, which is the 15 minute in this case.
Okay, well, the 15 minutes what I've moved up to have a quick look at. And the stocks are still in sync.
Yeah, so you're going to stay in that trade till it gets out of cycle.
The only issue I have with the gold is that it, while you're waiting for it, it can move 20 pips against you,
Yes. That's
so
why you stay on the 1 minute and you wait for the 5 minute to get out of cycle, which it is right now. But you have 15. Then you have to decide whether you're going to follow the 5 minute or the 15 minute, right? 5 minutes stocks are not working properly. 5 minutes is, the price is turning up, but your 5 and 60 are down here, so it's more than likely it's going to come down. You just have to be patient with it. That's the execution piece.
That's what, sorry?
That's the execution piece. That is how you want to execute your trade.
Yeah.
I mean, if you're looking at it, really is your entry should have been, if it break, this should have been a if you had broken the 3 ball here, because this is still a bullish 1, 2, 3. You know, if you're looking at that, but stochastic wise, you had the right trade. If you didn't have the balls on it at all.
Well, that's what I'm looking at. I'm looking at the fact that it's after breaking this low, it's after come back up and tested it. It tested
Right.
the major point on the 4 hour. It's after coming back up again now to test the break higher earlier today with the news, right? So I'm looking there at your 5-minute chart and I'm going, well, this is either going to just go sideways here for quite a while, or else it's going to go back down.
I mean, the rule of thumb is that if it goes sideways for 3 bars, if it doesn't do a lower low in 3 bars, you get out, because that minimizes, you can always get back in, right?
Yeah. Well,
we don't usually follow that, because we are stubborn people think that we got it right. Analysis was right. It should work out.
Okay.
And the market maker says, you idiot, you should be getting out. And we don't.
Yeah.
I don't know if what I said made sense, but that's what it is, right? I mean, if you look at the 4-hour stochastics, they're also turning down, cycling down.
All right.
It's not in a pattern, right?
Yeah.
So if you're looking for a swing trade, you shouldn't be looking for a swing trade, because you don't have a pattern. If you look at the H1 is in a pattern, right? So you could follow that pattern down and just stay on the 1 hour till something happens here, right?
Yeah.
In the meantime, gold going up and down is going to give you a heart attack. So it's ideal to trade it on the lower time frame, not on the 1 hour time frame. I mean, 22 pips in a heartbeat. One of the reasons why I don't trade this currency, because I don't have a strong heart.
Yeah. Just a sec, I've got to change the battery on my mouse. Hold on. Looks like I might have to invest in a new mouse. 1 sec.
All right. Looks like I have some documentation to do. You still there, Santiago? Hello? Still there, Santiago? Like I've lost people. He's on mute. Okay.
All right, guys, I'm back.
Yeah, okay.
Had a coffee. I forgot the coffee was on. Burn the damn coffee.
All right. So you missed the whole explanation I was giving, John.
Probably some.
So explaining why we don't take trades on the 1 hour for gold. And in the hours, I'm down 45 pips already. out. Was it the right? I mean, there's a pivot peak here, and it hasn't broken that peak. So anyway,
Yeah, but the 5 minute after the 5 minute finish cycling down, if it didn't go anywhere, then you need to start looking
yeah,
to try to get out.
right,
If it didn't break that low.
yeah. So this exit should have been somewhere in here.
Yeah, and then wait to see if you get another entry short
Right.
after that.
I mean,
So
the
as you can
ideal
see,
entry would be if it breaks this 3 balls. So
no. I mean, your entry was right. It's just it didn't break the 3 ball, so you need to be out.
yeah,
That's the difference. Is because if you wait for the break of the 3 ball,
maybe too late.
you missed out on a lot of pips,
Yeah,
and that's not a guarantee that it's going to continue. You may have a divergence and come right back up.
correct.
So the break doesn't mean anything unless it's going to follow through.
Right.
So as soon as you see the peak, that peak on the 5, you know it's trying to get back into pattern. You just wait for your 1 minute to get into pattern and go
Right.
short. And then the swing down, when the 5 minute swing all the way down, you start monitoring your 1 minute to see if it's getting out of sync,
Correct.
because that swing down didn't take that last low. So something's not right.
Yeah. Yeah, and the 1 minute Garner sync did a change in direction. Definitely an exit. Now it's coming back down. Oh, Lordy.
And that's another thing that I'm trying to, like my exit. If I know I need to get out and I'm in the wrong direction, I'll wait for the 1 minute to cycle down and then get out.
Okay.
So that gives me back some of the pips
So
that
the last pips, yeah.
yeah. And now I can see my 1 minute is not in a good pattern to the downside. I can get out.
Yeah. I mean, the 5 minute is doing a change of direction. Look at that. Definitely an exit at that point.
Right.
I mean, the exit was right here anyway. Somewhere in here, one of these 2 bars. Okay. I don't know.
When you have continuation trades, you're expecting a break of that high or low it created,
Yeah.
because the first continuation is pretty much a pullback, so it has to break the next previous high or low in order for it to continue in that direction. If it doesn't
Yeah.
do that, then something's not right.
And this continuation is saying should have broken this low,
Should have broken that low. Yeah.
but it didn't. So you need to start looking to get out. Okay. All right, I'm going to stop recording. I think we have enough lessons learned.
Now it's trying to set up again. Sure.
Yeah.
So
all right. Recording is stopped.